Hi guys, good morning. It is August 25th, 2020, 26th, 2020. Tomorrow's my birthday. Just throwing it out there. We didn't do the episode on my birthday, but maybe next time. Did we do it on yours, Anthony? Did we do it at DC on yours? No, it was the day before too, I think.
The big 3-0, huh?
Me? No, unfortunately, way past 3-0. But not that past, but you know. In any event, thank you everyone for joining us. I'm Melinda Grimaldi, real estate and title attorney and co-host for Damage Control. We are episode 24. Why are deals blowing up in your face? We picked this topic because we feel like we're getting questions left and right. So we're going to be talking about different things that come up. If you guys have any war stories that you want to share and ask us feedback on, we're happy to go on the fly. We kind of thrive when we wing it, right, Anthony? I think those are our best episodes, is when we kind of
winging it. Yeah, of course.
When we don't plan it.
We know what to say, and we've had so many scenarios that we can use those obviously as examples. That's what that's why we're doing the show. So.
Exactly. But we're happy to answer any questions. If you do have questions, please drop them in the chat. We're happy to take them into our program for the day. So most of you guys know us. You've been here before or you've seen us somewhere else, but we're a full real estate and title law firm. We help get you closed and educate you and support you through the process. I'll let Anthony introduce himself and then we'll get cracking.
Anthony Angelillo, 17 years in the business, Lending business, CEO, founder of Tag Team Nation LLC, and branch owner of PureMG, Miami Shore. Sorry, I'm just trying to let some people in here. So yes, I do lending, and I basically take water and I turn it into wine with all the closings that we're doing at this point. We've got a lot of challenging clients, but that's what makes our job so rewarding, and that is why we started this episode and these series. Is we wanted to explain to every single real estate agent, title attorney, insurance, lenders, whomever's chiming in, that no deal is a deal that you can't close. But from the experience that I had in a call center environment and countrywide 17 years ago, I learned a lot, I could probably say. And I just feel like all of that now is coming into reality with an online basis. And we're using the phones. We're using this device right here, text messaging people, emailing them, video content. And now we're just basically taking this and putting it into a system. And that's what we are here to do, is try to educate real estate agents on what we're using, what works for us. Melinda and I are rocking it this month, and we're continuing to grow. But it's thanks of you guys sending us business and vice versa. So let's do this, man. Let's get into it. We got a lot to cover.
Awesome. Yes, this month has been great. I need 5 more files, guys, to make my goal for the month. 5 more files to open. Just throwing it out there. Let's work it. Let's work it, people.
I'll take 5 too.
All right, let's get cracking. We talk about this all the time. That's a lesson too, by the way. I'm going to roll back to what I just said. In life, if you don't ask, you'll never get it. So you got to ask for the business, right? I used to be so shy to say something like that, like just 2 years ago. So that's a lesson. There's always a lesson behind all the madness that we talk about. So I wanted to remind that, because it's a good reminder for me too. Sometimes I still today will get shy about asking for the business. All right. Expectations. The first thing that we want to talk about, we've talked about it before, is expectations. Expectations for your buyers, expectations for your seller.
And
right?
Why expectations, Melinda?
Why expectations? Because we know, right? This is, even if you're a rookie, it's not your first rodeo, right? You guys have all closed at least a couple of deals. You know that things are supposed to go a certain way, but there's always things that happen.
Yeah.
Right? So I have 2 deals that I got in the last 2 days. Okay, 2 contracts. That it's the 3rd contract on the deal. Ashley's smiling because she knows what I'm talking about. There's 3 contracts on the same property within like 30 days or so. Okay. So 3rd time's a charm. Statistically, we're bound to close this time. I got good feelings about this, and right. But this is the reality. We have to, if that's your seller, if that's your listing, right? We have to know it ain't over until it's over. It ain't over until we have the clear to close, until we're signing, because anything can happen that sometimes is out of our control. So we will do our best, right? When you're explaining this to your clients, we do our best to keep things in line, keep them on track, but expect that we will have speed bumps along the way. Okay, because that's just the reality when dealing with so many people. Would you say, Anthony?
What do
Sorry?
you do to set the proper expectations to the client?
Well, we're constantly tweaking this. We just updated our welcome letter to say, hey, this is how it's going to roll. And it includes the day of closing expectations. Yes, we're happy to take your preference on when you would like to close, the time, the day, and everything else. But that does not mean that that's exactly how it's going to happen. And we all know that, right? So if we don't have a clear close, if we don't have a package, your preference to close at 9:30 a.m. after your 8 o'clock a.m. walkthrough, it sounds like a great idea, right? I love early closings if we can do them early, but that's not always possible. So we started to have that conversation early because we were seeing frustrated buyers and sometimes agents too, because they don't always understand the process. So let's talk about the process, because one of the other things that can make it rocky is if you don't understand the process of what happens. So between the few days before closing, there's a few things I want you guys to remember. Most of the time, the CD the buyer gets 3 to 4 days before closing from the lender is not final.
Not balanced.
Not balanced, right? There's a few other things that need to be tweaked. There's a little bit of back and forth. Now, Anthony does a great job of telling him this is not final. This is what you want to look at as final are these types of things, right? The rate can't change. Your loan fees can't change 3 days before. There's a certain amount of list of things that can change. It's usually regarding the loan costs, right, Anthony?
Absolutely.
That's what can't change.
Absolutely.
Other things can be tweaked because they're running with estimates. Maybe the insurance amount gets tweaked because they have to change a coverage type or but they're using those estimates, right? But the things that cannot change are the loan related costs and terms. Now, so they're gonna start wanting to send the wire, right? As soon as buyers see that, okay, when can I wire? Well, we can't wire yet because we don't have the final figures. Final figures come out once we balance. What is balancing? Balancing is the act of title and lenders' offices communicating fees and costs. And how I train my team is we're the boss of certain things and they're the boss of certain things. There are certain things that the lender controls what to the penny goes on the statement. And there's certain things that we control. So doc stamps, recording fees, title premiums, contractual obligations, we control that. Prorations, we control that. Loan fees
is a big issue.
Loan fees, loan costs, escrow accounts, prepayments, that's a lender's responsibility and what they give to us. I can't change their fees, they can't change my fees. Once we balance to the penny and our fees for each other match in our system, that's when we're balanced. Once we're balanced, the next step, Anthony, if you want to take it over from there, what happens after you're balanced?
Once we're balanced, then it is going to be approved and we're going to go over it with our client. But let me use this case.
But hold on, I'm trying to take you somewhere else. When we're balanced, then there's a process of generating a package.
Yes, once we have the package, then we're going to disclose that package to our closer is going to disclose it to the buyer and the title company, and we approve it. And then it's our job as loan officers to take that CD and go over it with that consumer. But,
okay, so expectations about the closing day and wire and scheduling, just so we can wrap this part up. Depending on who we're dealing with, we don't know the turn times. We'll usually get an estimate. We'll communicate the buyer wants to close at 10. But sometimes we know if we're not balanced by 9 o'clock, it's highly unlikely that we're going to get a package by 10.
yes.
And now with the turn times and the market and the rates, things are getting very tight at the end. So we do, and letting the seller and the buyer know that, yes, we're trying to get everything done for this time, but you know, we need to stay flexible is where that comes in. So we in our welcome say you need to be ready to be flexible the week of closing to deal with last minute requests, to deal with last minute wires, scheduling his estimate, you know, and then we'll figure out as soon as we get the concrete information. Because until we're balanced, and I know that number is not going to change, I'm not going to ask for the wire. I know they want a wire as soon as possible, but I rather not send the wrong amount, because until that package is generated, it can change once we're balanced.
Let's use this as an example because we're talking about expectations. Thursday night, 4 o'clock. Closing is going to be subject 4 o'clock Friday. If you don't have a CD balanced yet, you're not going to have a package most likely the next day. Or if you do get a package, it's going to be a rushed closing. And see, this is where expectations aren't set up properly. If you don't know the process from the title aspect or the lender's aspect, and a lot of agents talk to me and they're like, we don't need to know this. I would encourage you guys to know this. Then you know what you're going into. So if it's 4 o'clock on a Friday, you might not get a funding number and they might not get the keys. So you don't want to be in that position. So it's really setting up those expectations saying, look, we need to make sure we get a balanced CD Thursday night. Therefore, a package goes in the morning. That way it's not a rushed close-in. 4 o'clock is fine. Funding number gets distributed. A-okay.
But Melinda and Anthony, can I add to that for a second?
Sure.
For example, this just happened last week. We often get a call from the realtor saying, hey, we scheduled the closing at this time. We don't have a balanced CD. We don't have a package. Now, what's happening with COVID right now, and Melinda, you could probably attest to this, time slots are filling up very quickly. And if the realtor comes in and says, hey, we're closing at 10 a.m., lender's information, package CD, and all those things aren't in place, it would have been better to set the expectation to say, hey, we need to close at 2 and fill that time slot because there's no way we're going to meet that 10 o'clock closing. But when the realtor tries to set that at times, it can really pinch the whole process. And it's just because they don't understand maybe what has to happen. So that 2 o'clock time frame may be filled because we were trying to force a 10 o'clock issue, and then holy cow, all the expectations and everything starts going south because we missed this time slot where we could have set the proper expectation.
I think if we roll back to open communication, so we just had this, we had this all the time, like the agent should call, say, hey, look, this is what we're looking like, this is what we need, this is what we would like.
Right.
And then have us, you know, then we can go, like, depending on the relationship we have, we could say, Anthony, is this possible? Can we make it happen at 12? Do you need more time? What is it looking like for you? And then that's the open communication between lender, title, realtor that we got to have to be able to make the client experience smoother.
Can I sound cliche, and was that a tag team effort?
Yeah, very cliche, but still very well said. Okay. Let's, excuse me. I want to talk about funding really quick, because this is another expectation that everyone doesn't understand. So there's a few things that I want you to consider when we're talking about funding. On the seller side.
Water, get some water.
I'm
Take
good.
a break, get some water.
We fund, when a deal is funded is when I say it's funded, right? As a title. I need approval from the lender, but then I say it's funded. Once I release documents, wires, checks, that means we're funded. It doesn't matter that the seller hasn't received it, we're funded. And that, by contract, is when the keys get exchanged. Okay?
Does everyone
Don't let,
understand that?
does anyone have questions on that?
Everyone's not in their head because
Everyone's in their head. I see a question there.
Joe,
Joe, speak
what's up?
up one more time.
Say
Okay.
it again, say it again.
When we are funded is when I say we're funded, which means checks can be released, docs are released, and wires are initiated. That does not mean the seller received the wire, right? That's an important distinction. Depending on who you're dealing with, there might be a scuffle at the end because of this. The contract only requires it to be initiated, not received. Don't let another agent bully you, and don't be that bully. Okay, because unless the contract specifically says keys will only be released once that is how it is. Okay, so I just want to I'll let you guys know about that. Now, we do require the lender approval. We do require to receive all originals to be able to fund.
Correct.
Okay, we can't fund with copies, and sellers cannot electronically sign unless it's remote online notarization. Those are just a few things there that I want to throw out. Okay, Anthony, why don't you talk about the lack of education on a borrower and what that means for the process with regards to loan?
All right, so I've got on my agenda here, Credit Karma, don't buy a car, self-employed, change of employment, open communication. Let's start off with liabilities, okay? If I'm a real estate agent, we do this. We have milestones throughout our process, and we're constantly educating our consumers with video content, text messages that have embedded video in it, warning them, hey, don't buy a car, don't buy a plane, a train, an automobile. Let's stay away from that. So we're constantly educating that client and informing them in terms of, hey, do not do anything that's going to jeopardize or compromise your credit, especially if we need to do a what if simulator, which is going to increase that credit score to get them to have better pricing or lower costs associated with the transaction, right? So that's one thing, if I'm a real estate agent, that I would really also, piggyback on. The content that we send out to our real estate agents is the same content that we're sending out to our consumers. So we're tag teaming this deal by educating that consumer and setting up those expectations so that that deal doesn't blow up in our face by having them, go buy a car. I had this on Saturday. The guy got the email. It's with Daniela, awesome agent of mine, and the client called me up and said, look, I want to buy a car. My car just shit the bed basically. And I'm like, all right, well, you can't do that until we physically purchase a home, because that is definitely going to mess up our debt to income ratio, because he didn't have that liability on there before.
So
Him taking that action. Go ahead.
What would you say triggered him to make that call? Is it because of
Email.
something that you sent him?
The email that went out. Now, 9 times out of, now, did we discuss this during the loan application? Absolutely. But that's water under the bridge. That's here and there. So people, the highlight of someone's moment is the execution of a contract. They're deflated by the time it's clear to close, because it's such a tedious process. There's a lot of moving parts. You can have the best team since sliced bread, but they're still going to be taxed mentally, because it's a draining situation for anyone. We deal with this, so we're used to it. We're jaded with all this stuff. So just buffing that stuff in between is key, and educating the client would be key as well. So if I'm a real estate agent, I would set up my own sequential email or drip campaign to parlay with the lender that you're working with. Okay, and if there's content that you can think of, piggyback off that lender. It's good information. It's a great reason to engage with them through the milestone, and it's going to open up discussion and communication, so that way if they do have questions and they feel like they're being a nuisance because they're bugging you or driving you nuts, it's a great way to really engage with them. The second thing, go ahead, Melinda.
No, I love that. Like we're actually working on that for our clients. So we just created a list of some things sellers need to consider, like as they're moving out, like what to do with the keys, what to do with the policies and their water bill and all that stuff. And it's like a cheat sheet of things that they can just reference as they're getting to the closing, closer to the closing date. So
now that's the front side. The reason why I developed all of this, and Peter Ortega, Kevin, they all hit me up on YPM last week, and they said, what made you, what was your why? It was this. I couldn't control the client and I couldn't control the real estate agent, but I knew that I was OCD with everything and organized and everything was great. Couldn't scale my business because I couldn't control all of that. So I set up automation to control it for me, because I'm cloning myself, right? So that's the concept of all of this. But now take the back end of it, right? That goes for Melinda as well. Don't have them start putting on FP&L, calling the cable guy to come in the damn day of closing.
Buying furniture on credit.
Buying furniture on credit. We got the furniture coming. City Furniture is going to be there at 4 o'clock.
Outside. Yeah.
The movers in the driveway. Oh my God.
Russian, it is not good. You want them to have a good time, a good experience. That's the last moment they're going to meet everyone. A day, they can wait a day. They've waited 30 days. And I know that people want things now, but for me, you're gonna set up expectations and you're gonna deliver with a very chaotic closing, okay? And if you don't agree with me, then that's your humble opinion, but I just think there's proper expectations and protocol when doing all of that stuff. Now, let's go into Credit Karma. This blows up deals all the time. That's Vantage. They pull from a different algorithm than FICO. What I found out, okay, is that we are getting so many leads because when someone says, I know what my credit score is, and I go, have you used the application Credit Karma, playing dumb, 9 times out of 10, yeah, that's the one I'm looking at. It's not accurate. It's not accurate, okay? It's a different algorithm. It's not what we pull from. The banks pull from FICO. So it's completely apples to oranges. And so we might have a deal or you might not have a deal. And that's what's causing deals to blow up in people's faces, is that I'm pre-approved. I looked up my credit score with Credit Karma. I'm assuming that it's a 696. And then when we go to pull it, it's a 585. All right. So my recommendation for that is, if I'm an agent, proper expectations. Oh, you're pre-approved with XYZ lender. That's fabulous. Great. Why don't you check out my lender, okay, and take that loan estimate and make sure you compare apples to apples. The agents that I work with, I have 7 deals with one agent right now, okay? The reason why I have 7 deals this month with one agent, she sets up, and I mean cliff notes of what I'm dealing with. So I go in and it's like, I know exactly what I'm going to go into. If they're already pre-approved with XYZ lender, I'm now going to go in and I'm going to say, okay, the proper expectations for this is either they're going to take long to close, or their rate is going to be higher than ours, or their cost is going to be different, or the prorations of the loan estimate is completely off, because most loan officers don't even know how to do that. And when I go in, I'm looking like a hero, and I'm making the agent look like a hero because I'm setting up proper expectations and forecasting what to anticipate prior to having it happen. Does that make sense with everyone?
Yes, and I want to say also, if the buyer does come to you with their own lender and they don't take your call and they take too long to respond to you, that's a red flag, right? If they don't pick up your call in the sales part of the process, where they're trying to still close and get that client,
yeah,
then that's a problem, because they're definitely not going to be picking up when what hits the fan, or they're not going to be communicating very well. So I think that's one of the most important things when hiring a loan officer or a lender, is, are they going to communicate with you throughout the process?
So Noel is a brand new guy on my team. You can wave, Noel, you spoke already. All right, and he just closed the deal, and he told our team yesterday, I've never been in a position where I don't have to do anything. The operations took it. So he's trusted in the system, right? Same aspect with a title company, insurance company, a lender of your choice. What is the service level agreement that you guys agreed to? Meaning, I know Melinda does an amazing job. I don't even have to ask. I know everything's on time. I know everything is systematic. I know there's a formula to it. Where I'm going with this is that if they're already pre-approved, most real estate agents don't want to touch it. I don't want to rock the boat. It's their decision. That person's now in control of your commission, okay? Because they're approved with someone you don't know if they operate on Sundays, Saturdays, whatever the case is. How do you penetrate to get through to that client? This is the toughest thing. Agents, they don't know how to deal with that objection. And so my whole thought process is the cliff notes. Who are you pre-approved with? Okay, XYZ Bank. Do you have a loan estimate? Look on the loan estimate. If it's not locked, they don't have anything. You might as well put it on a sticky pad, right? Because rates are changing 4 times a day. And so in that case, then I would segue and say, hey, look, if you're a first-time home buyer, you might be able to qualify for the mortgage credit certificate, gives you a tax refund. There might be Florida bond. There might be something that attracts them to segue and detach from that person. So now you're in control of that lead, but now you better give that content to that lender in the Cliff Notes version of saying, hey, this is what you're up against. Okay, if you're going to a retail lender, rates might be a little bit higher. If it's wholesale, you're going to burn the bridge. So there's a lot that goes into it and really setting up those expectations up front.
I think that ties us into like the wrong lender being selected, right? So we all have our have our dispositions on how we feel about certain people, certain companies. But whether you're on the listing side or the buyer side, the value of that pre-approval, like what is that pre-approval worth? If the lender won't pick up the line and discuss that, with you as a buyer or the listing agent, that's a red flag. What went into doing that? Was it just shot out, or was there documents collected? And if it was a condo, does that lender know anything about that project? Okay. And if they don't pick up the phone, we already spoke about that one. That's a big red flag to me. So that can really make or break. For us on title, it's a red flag at 15 days into the contract, we don't have a title request. So if you're working with a deal with me, and it's like my team will be like, hey, we asked for it like 3 times.
You're delayed.
I'm like, something's wrong. If they haven't shot that out yet, something's wrong. They haven't made a decision yet. They haven't done anything. So you'll be hearing from us as to, listen, something's off. Our spidey senses are tingling, that, there's something in the process that we don't see, but we know it hasn't happened yet. So, that's an important thing.
Melinda, that's a great point. Can I add to that from a lender perspective? Not just having a title commitment to the title request. If that lender hasn't reached out to introduce themselves to the title company the day after the contract is received, that's vital. That's huge, right? That's a big deal. If that hasn't happened within a couple of days, that's kind of not a good feeling, right?
Yeah.
So I just wanted to add that.
That's a very good point too, right? And then with regards to, since we're on the topic of wrong lender, the wrong title agent, what can blow up those deals? Of course, we have the communication issues with everybody, right? Not communicating when there are problems, because even though the problem's solvable or not, I like to communicate the problems, because then we know if things come down to the wire, you have more flexibility and more patience from everybody. Listen, 2 weeks in, we have this problem. This is what we're trying to solve. Even if I know I can get it done, we always get it done. But sometimes you do need an extra day or two, or letting people know, hey, listen, the listing agent is not responding. I have a seller that we've been trying to schedule her for 3 days, 4 days. She's out of town, and we're supposed to close tomorrow.
You're chasing.
Right now. I don't know if they schedule it now, but I said, okay, yesterday at 5 o'clock, if we haven't scheduled, let everybody know, lender, buyer, agents, listen, we're getting ghosted, just FYI, we need to schedule this in the morning. Otherwise now we have a problem to get originals by closing. Right. So, but the point is letting people know in advance, because if it does become a problem, well, why don't you tell me before?
Mm-hmm.
Right?
Yep.
No one likes that last minute, right? You're setting up the expectations early. Picking up the phone, of course, is always an important thing, and giving updates. Late orders. So we order everything day of, right? Creates a little extra work if the deal gets delayed or canceled, but that's okay. That's part of doing business for us. Lien search, title search, day 1, we get the contract, we order. Now, if they don't do that, which I would say the majority don't do it day 1, half will do it the first week. Some will wait for inspection to be over and an appraisal to be done, which means they will wait to respond to the lender's requests. They can't respond because there's no commitment. If there's problems, they wait to find out about it 3 weeks in, 2 weeks in. And then that becomes a problem to resolve, right? Especially when you're dealing with city liens. And right now, city liens are taking forever to resolve because they're all working remotely. There's one email, one phone line. So you want to make sure things are done early to prevent that from happening, and to make sure the lender gets what they need in their pipeline fast. And the lenders right now have a lot of things in their pipeline. So if they're waiting on your title company to respond to title, then that's going to be a problem. I represent sellers, so I see this all the time. We're not ordering until appraisal's in. And then what happens? Everyone's ready to close early. The lender's ready to close early. Buyer and seller ready, and title's not ready because their searchers are not in.
Let me go into one thing here. Open communication is all of these bullet points is open communication. Seriously, it's all open communication. When I'm looking at the content that we're going to send out right now, the biggest thing that I'm highlighted on is large deposits as well. All right. And I don't want to get off track, but I just want to talk about that and elaborate a little bit about that. That's, once again, setting up expectations. I don't know about other states, but in Florida, there's a lot of pillow money. All right, let's be honest. And so how do we take that money and how do we get it into the bank, or how do we take a gift from mom or dad or XYZ? That is lack of education on both lender or real estate agents. And I would really highly recommend, once you're speaking to your lender, everybody should be in that conversation. Every single party associated with that transaction should be involved in that conversation. So that way you're tag teaming that deal together to say, hey, look, we know that grandma's going to be gifting you a money, but this is what we anticipate. You just transferred XYZ to XYZ bank. You're opening up a Pandora box. And if it's a new loan officer, they're going to throw that up to underwriting. And that also is going to blow up your deal. All right. And that's going to set serious expectations that are wrong. And it's reflecting back on you as an agent. All right.
But that's also what Melinda said earlier. What's that pre-approval worth? Exactly. If that isn't taken care of on the front end, really, what was that pre-approval worth? Because that'll blow up that deal if that isn't addressed early in the process.
Yeah.
Absolutely.
I have a question.
Yes, please.
Is it common practice for lenders to cross-qualify?
So what, Anthony, what is cross-qualify? Or I haven't heard that term yet. What does that mean?
Qualify.
So I'm in a mastermind with realtors from California, and in California, they, like, if they're representing the seller and they go under contract, they ask for the loan of the buyer to be cross-qualified by their lender.
Okay. I see that happen sometimes. It's really there's two benefits to that. You could actually end up getting the deal to one of your referral partners and controlling the process better if you know who the loan officer is. And Anthony just did that on a deal. But it also makes sure that you know that your deal is on track.
Here's the legality of it. All right. This is the bottom line. And no one wants to talk about it because it's a gray area. I'll be the first to talk about it. You're not mandated to use anyone, no per RESPA. So they can't say that you have to use XYZ company, especially with builder business. We're going to give you a $10,000 builder incentive. You've got to use in-house. I mean, let's be real, man. That's a legal way of steering. So at the end of the day, you can't mandate, all right, Ashley, that they use that financial services. However, you can say the seller is requesting a conversation, okay, to happen to make sure it's a viable deal. All right, you can't disclose information, but 9 times out of 10, if there's an incentive involved, okay, and that is a fine print that you better have a title attorney or a real estate attorney look at 15 times over, then maybe there's an incentive to use that person. Is it a realtor concession? Is it no lender fees, flat fee? Can't discriminatory for any sex, marriage, religion, blah, blah, blah. The point I'm trying to make is you can do that so that way you can control the business on both sides. I just did that, okay? And the reason why is they were shopping at a Federal Depository Bank. I'm not waiting 60 days for one of my best agents that listed their home to close. I can close in 30, they're taking 60. I got to do a lock extension. It's a nightmare. So what did I do? No lender fees, flat fee, use our financial services, mop the floor with the rate that they were getting. They obviously provided a loan estimate. Now I have both transactions. This is the whole concept. Control the deal. So as a realtor, you're controlling your commission. That's it. Hopefully that answers your question.
Yes, I learned the hard way, so yes.
And so super important, this is going to roll me back to one of our other points that we haven't, that we wanted to talk about, was like the property type and how it impacts the loan approval process. So the most important property type is condos that we're dealing with and how that impacts our loan approvals. So we have a whole show about condos. So if you didn't catch that one, you should be able to get the replay. So I'm not going to overkill it, but I do want to remind everyone that as a listing agent, please collect the information on the project so that you can provide it to the lender and know yourself. Call your people and say, hey, Anthony, this is my listing. Can you let me know how these docs looked and what type of offers I should be accepting? so that you're not accepting the wrong ones. This happens to me all the time. I even pick it up. I call the agents. I'm like, guys, this loan's not going to work. I know enough that this loan's not going to work. I guarantee you this mom and pop little condo in Dania Beach or Hollywood that's selling for $90,000 is not going to have the budget and reserves for 5% down. I could just tell you that. I almost guarantee it. Like, and then I have these conversations with the loan officer. No, don't worry. I got this. I got this. I got this. This guy's from up north. He's just starting down here and he didn't get it. And now the deal's dead. And now we have to look for another buyer. The buyer's looking for something else. The seller's looking for another buyer, right? So conclusion is know your building, right? So know your building and have that information to educate yourself on your property and what you need and what you can accept. Now, obviously there's certain things we can't control, but like if there's litigation that only comes up later, but there's a lot of stuff that we can pull up from the beginning and be able to hand that off and provide it up front.
This is part of a service level agreement. This is stuff that I talk about to all my agents. I won't take a contract. In fact, I had that scenario yesterday, and it's a client that I closed. It's her sister. And I said, I can't help you out. I'm sorry. I need to see the budget. They sent me the budget less than 1%. Place is bankrupt, man. I mean, there's no money in this place. How are they buying? They're buying cash. They're buying cash. Look at that stuff. I have a formula that I'm looking at. If you guys don't have the formula, we'll send it out, part of the content, but you take the reserves and you divide it by the maintenance income. It's really easy. It's right there on the budget. So every agent should memorize that. So you're not spinning your wheels. So once you get the 2020 budget, you look at it. And then you just
2020 final budget,
Final
not
budget.
proposed, not draft.
Screw everything up.
Oh, yeah. And then we have there was a building where they didn't have their meeting yet and they're having it later and we don't have the budget yet. We're waiting. And there's nothing you could do, right? If it's your listing, you try your best. If it's your buyer, set up the expectations. Listen, they can't approve your loan until this is done. And then if the seller, the listing, like try to push it, make the building do what they need to do because you at least have a voice in that. So agents, you really need to educate yourself on the condo intricacies. Go watch that episode. It was really a good one. And there was a really good, if you subscribe later and didn't get there's like a cheat sheet that Anthony has for that. Let us know and we'll send that to you.
It's also a YouTube channel as well. It's a whole channel now. So
awesome. So loan knowledge, right? Understand the different types of loans as agents so that you know what you're dealing with. Part of the process is educating yourself. You're not doing the loan. I don't do the loans, but I know enough about loans that I can foresee problems. I can foresee issues on the deals that I work with. Why? Why are we churning our wheels for things that are not going to happen? You guys follow me? We have enough things to do in our lives. Between homeschooling, running a business, trying to find new clients, to be working on a deal that's dead from the beginning. So educate yourself and have good partners out there that you can call and say, listen, look at this for me. Give me 5 minutes, please. Look at this for me and tell me if this is even going to happen.
We just had this prior to this show right now. Bob, who's on here, we got a client referral from one of my great agents, and she will not take anyone out until they get pre-approved. She doesn't want to waste her time, which is awesome, but makes her a good agent. She doesn't care. $1 million deal. Nope, don't talk to me. Get pre-approved. I don't care how much money you have in the bank. That's irrelevant. So lo and behold, doesn't have 2 years in taxes. So now we have to put mom on there, and it's a dead deal, man. He just started his LLC. We need 2 years. He's self-employed, but there's plan B. We're going to put mom on there. He's going to go on title. All is good in the world. So that's setting up the expectations, and that is the delivery. It's really knowing the 2 years, self-employed. You need 2 years, right? So it's things like that. That's what I would be memorizing.
But Tina put something in the contract how she hates it when they see that the buyer has to get pre-approved. I think that it's different when you have a DU, right? If you have a DU, that's a whole different story. A DU means you gave docs. A DU means they've been reviewed and submitted to underwriting, right, Anthony?
Yeah, she's right, man. It irritates me too. And in that case, all right, if I'm going up against that, I would say, let me speak to the broker. Let me ask him a couple questions. But it's annoying. I get it. DU definitely should have everything. However, If I'm really letting the cat out of the bag, I could put a VOD, a verification of a deposit. I could say they have a gift fund of 60,000. I can put it in there, run DU, and give it to the seller's agent. Don't think that's happening either. So I mean, that's definitely happening.
But it's at least docs have been submitted to get a DU, right?
No.
Someone says, what's a DU?
They're
Anthony.
They're supposed to be.
Okay, so that's why I always say the approval, whatever type of pre-approval you have, is as good as the paper it's written on. Whose letterhead is it on? And being out there and knowing the reputation that comes with time of who the people are in the business helps a lot. We have a question. What's a DU for those that don't understand that lingo? What is a DU, Anthony?
Desktop underwriter, Fannie Mae approval. Okay, and so we run it through either Calyx Point or Encompass, which we use at P&G. So your loan officer, and 80% of the business uses that. If it's a federal depository bank, they're going to have all their own proprietary systems. You need a DU. A DU is going to validate how much reserves, how much is in the bank, what their credit score is, their debt to income ratio. If I'm a good listing agent, I want to see that. It's important because your pre-approval letter, I always joke, here's your pre-approval letter. Here you go. It's garbage. It's an Excel spreadsheet. So
a DU actually is a printout from the system that shows income, assets, debts, right? Liabilities, right?
Yeah.
So
and
why the DU
is right. You're right. So it's a double-edged sword. See, Patina's got her shit in order. 12 times, if you see that, it's been ran 12 times, what's going on? Like, what are they doing to the loan to manipulate it to make it work? Something's triggering it, so it's giving them either a refer with caution or an eligible or something that is really quirky with it. So that's interesting. That's a great concept, Patina. Yeah.
And if you get one and you don't know how to read it, call a friend, right?
Yeah, I would add to that too. There's a lot of DUs that we get that a realtor would help them a lot by going through that DU finding with the loan officer, because if you see a couple of red flags, like Anthony just said, if that debt to income ratio is very high, it's worth a call to that loan officer. It may tick that loan over the guidelines that are approvable. DU is nothing more. It's the initial findings. We don't actually have to have any documents to run DU findings and get an approved eligible. It's what we, as a loan officer, initially put into the system. Then the underwriter collects the DU findings, matches them up with all the documents to stamp a final approval. So DU findings can be manipulated by a loan officer to get a green light on a file that shouldn't have been approved, right? Because they put the information in. It hasn't been necessarily verified. So it behooves a realtor to learn what to look for, right? High ratios, run 12, 15 times, a significant number of assets, high loan to value. Those things are red flags that it's worth a phone call to the loan officer and say, hey, are we sure this file is in good order? Because
so Anthony, I see our next request for glasses already here.
Done.
I did one of these last year about how to review offers, like the contractual offer and then the DU. So we'll get that out in the next couple weeks, guys, for you.
Here's another tip that I always see: no loan officer, because they're lazy. I don't want to criticize here, but I mean it's obvious. If you see reserves at 10,000 even. Come on, man. They didn't.
Yeah, exactly. Yeah.
There's 10,000 even. It's got to be to the pennies. What's the last 4 digits of the account number? You pick up on that stuff as an agent. But interesting. Yeah, we'll do that. That's a good seminar. It'd be a great episode.
Yeah. And I think if you're here, you're part of like trying to educate yourself on the process. And that always makes for, less explosions, right, on your deals. Because really, you guys are the ringleaders and we are all, so they're supporting you. So it's important that you guys keep educating yourself on the changes, on the contract, on loan types, on the buildings. If you're going to like try to niche yourself in a specific area or city, get to know those projects, get to know those buildings, and start collecting that data so that you're able to better service the clients and have for a smoother process. One thing we didn't talk about, but we've talked about it before, is the proper intake. intake or the data collection in the early stages with your buyers or sellers is super important. Are they going to be traveling? Are they divorced officially or separated? What type of ownership do they have? Who needs to sign? Who doesn't? Is there a power of attorney? Guys, powers of attorney need to be approved by the lender in advance. So if ever you hear a borrower or buyer needing a power of attorney, like right away, call our office, we'll prep it, and we'll send it for approval. Like that's super, 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 super important. We don't want that rushing to the last minute because it could delay a deal. So all these things, if you've heard my commission killers class or heard parts of throughout, we're always talking about the proper intake. If you collect that data up front, you're able to trigger a lot of those things that are not problems on day one contract, right? They're a problem if you find out about them on day 28.
Yeah.
So early searches, proper intake, open communication, educate yourself, and that's how your deals don't blow up, or at least you minimize the impact of the issues, of the delays. You minimize the amount of problems that you have, right, Anthony?
Look, I think we should do a class on that as well. I mean, intake forms, because here's the reality. That's where it all stems from. We have an intake form. Some of my agents use it, some of them don't. I'm going to start mandating they use it. And the reason is the 5 minutes that takes to fill out that application, okay? Oh, but it's the lender's job. We're not asking for socials, man. We just want the meat and potatoes of that. If they put marital status separated, then I know no legal separation in the state of Florida. I know there's gonna be a red flag right there. So that intake form makes us digest it as loan officers, and that just gets us that pre-approval letter faster, but it streamlines the process. And it is crucial. And then the content that we produce that goes out to that consumer, whether they buy or not, it's constant stuff that's going out and educating and parlaying with that borrower's agent. That is cool for us to scale, you know, the actual borrower's agent, which is the buyer's agent in this case, to say, hey, look, we've tripled your business. Kashana knows this. Kashana Guzman, one of my good agents, we've got 4 clients from the same client because of the intake form. And it keeps pinging the client saying, hey, do you have any referrals? Hey, thanks for playing, blah, blah, blah. So much content going out. They're sending us more business. There's 4 people that we have from that one lead because of the intake form. So that 5 minutes of her life saying, man, I got to fill this out on behalf of the client or with the client when she has her consultation, it's priceless. That is something we should talk about, because you have an amazing intake form, Melinda. Amazing.
So I had a manual one. I had one that became a fillable form. Now my system actually does the intake for us through, it's like a chat system. So they just check the box or they confirm information. And because we were constantly following up on our intake, and now the system follows up for us, it just makes it for smoother, unless they're older and don't like tech, and then we do it manually, verbally or things like that. But it definitely intake for us. Intake is crucial. Yeah. It could really make or break
data out.
A deal.
They say in the IT world, clean data in, clean data out.
Look, Dana just put that in the chat. Garbage in, garbage out.
Yeah, it's crucial. I think we should I have an intake form that we can send out, and I think that
so do I. But maybe we can do a class about intake in particular and why those questions are important.
Yeah, without a doubt. I think that's great, and that's stuff that prevents anything from blowing up. That's the whole concept of this episode right now. I mean, that's the meat and potatoes of everything. So
love it. So guys, any questions? Any feedback, any horror stories that you guys want to like chat about? We have a few minutes left. I see Kesha waving.
I say communication with your lender is key, especially with Anthony and I on a deal that I had on townhomes. A lot of these townhomes too that your client falls in love with, they're not fee simple. They're listed as condos. So they get excited, put in a deal, and then you are screwed because it's listed as a condo. Now they have to put down 20, 30%, and Anthony is like, this is not gonna work. Taxes are high. I communicate with Anthony. I'm like, listen, I wanna put in this offer. can you run these numbers with me first so I can make sure, or before I even show the property, and I know they really like it, I'll run numbers with Anthony.
You know what's crazy is that I wanted to elaborate on that, but I didn't want to go back on our agenda. And the crazy part is that, because Melinda would be like, what are we doing?
Anthony, stay on agenda.
I'm scrolling.
Stop
So,
scrolling.
but here's the crazy part is that a lot of agents, they're afraid to say no, right? And if they say no, you're deflating the expectations for that client, right? And so how do you handle that objection? Crystal, another agent of mine at KW, she says, you're really influential to talking to the client, the listing agent. Can you call that person? Hence, we just got a deal together. The point I'm trying to make is I would say, let's get my lender on the phone right now. We're in this place together. Let's find out. Oh, it's governed under a condo association. Let me be the guy that deflates them gently and then say, don't worry, get back on your saddle. Let's look at something that's fee simple, because if you're not doing that, they're going to look at you as an agent and say, what is she doing or he's doing? Or are we looking at it? Are we doing our due diligence? Because Kesha's amazing at this. She sets the expectations and gives me the information prior to them going to the house. So that's another way of doing it. It's open communication. That's why we have our Slack community, because we're constantly slacking everyone saying, hey, what do you need? What do you got? Boom, 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 boom. That's the concept of it. But you don't want to make sure that they're losing altitude. If they're losing altitude, they're going to think, oh, the stars and the moon are not aligned and we're not meant to buy. And now you've lost the deal. If that makes sense, right?
Yes, you want to keep them, and sometimes let the lender say, listen, this is why this townhouse as a condo won't work. And if you're not sure how to check if the townhome is governed as a condo or not, just pull it up on the property appraiser, and you could see on the property appraiser the short legal that they have. If it says condo in it, you know it's governed as a condo. So that's the way to know. And if you're not sure, you could always ask us. We could look at it real quick and let you know.
There's a cheat sheet that I have. There is a 5-minute video that educates both the buyer's agent and the client. And then there's a limited review, a full review. I've literally taken the time, and it took me probably a week to generate this. The content that goes out to that consumer, that's what I would be sending. If you guys don't have that template, I will be more than happy to send it to anyone who needs it, even a lender. I think it would help out a lot of people because it's helping us out, and we're not wasting our time, which is time that we can be prospecting.
So Melinda doesn't yell at me or going off topic, and I'm going to stay on topic here. Not blow up deals. A good example, Anthony, we just closed this one this week, right? So we got our clear to close. Okay, there's a difference between clear to close and actually having that funding number. Well, right now with COVID, they're doing a verification of employment the day before closing. My borrower decided to turn in his resignation letter the day before closing.
No.
Because he got his clear to close 3 days prior. So we do the VOE, no go. We had a really good listing agent and buyer's agent. We got an extension. I told him to get another job. He secured another job, and we worked it out, and they ended up closing. But guys, just because you get that clear to close, when it's funded, when you get the keys in your hands, let's not make any changes to anything in the financial profile. I would stress that to all buyers. Yeah.
That's a really good point. And then also say, hey, boss, you want to pick up the phone? They can't reach you. I had that once. We delayed funding for almost a full 24 hours because of that, the COVID VOE.
Yep.
Guys, if you want the template, email me, and I'll be more than happy to send it to you guys. It's killer. It is. I've wanted to generate this thing for so long, and it took me a while to do it, but it's a lot of content, and it's valuable for your agent or your buyer. Reviewing the actual template, tutorial, and the formula. There's a cheat sheet formula for everyone to understand and digest, and that I'm seeing now them understand what they're going into. And I've explained it of why the banks are asking for X, Y, Z, and why they want 51% ownership and 10% liquidity in that place. So it really is an easy way to educate the client. It's education, what it is. I'll send it to everyone.
I love it. Love it, love it, love it. Any other questions? We have time for one more.
Any questions on Facebook? I don't know. I didn't look.
Oh, I you know what? I forgot to even have it open this time.
I know I've got a lot of DMs, but
Mistakes. All right,
Anthony,
guys.
a Thanking Tuesday we just did on the itemized fee sheet, you know, what we're encouraging realtors to do is whomever their go-to lender is, we'd love it for it to be us, interview the lender and have them explain that itemized fee sheet. A deal can go south if they don't know how to explain that to the buyer. That's the initial rundown of what the deal is looking like, cash to close, payment. If it's not clean, simple, and easily understood, that can really put a dent in the file. So interview your lender, have them go through a mock one with you. That's what your client is experiencing, and that's who you're referring. So we're recommending that you realtors go ahead and do that. Don't be bashful, don't be shy. Say, hey, go through one with me. Let's go through it. Explain it to me and make sure it mirrors how easy it is to do business with you. It really will help you in the long run.
And understand those documents, right? You should be able to answer most questions or so on a closing disclosure, on a fee sheet. And if you don't, ask. And if you think we need a class on it, let us know because we're happy to do that, right? We're always looking for ideas and are always looking for feedback or requests for. So I'm glad you guys put that in there because I really, it's a good reminder for class ones that we've done before or that we can create for you guys because we're always looking for that content for you. All right, with that, it's 11:01 on the nose.
man, that's a wrap. I can keep going on and on, man. There's so much.
I know we could, but
the content that we're sending out, it's pretty good. It's good stuff. So, you know, I would read it. And then if you guys have not registered, please register September 16th. That's going to be our lead conversion class. There's already 117 people registered. If you don't have
that's the Miami Board of Realtors, right?
Yeah.
So you'll see that come out through the emails if you're on the board. I'll be there as a sponsor because, you know, I love to hang out and like learn. I always learn from Anthony about sales. So it's such a great, he's a great instructor when it comes to sales for sure. And when it comes to a lot of stuff. So join us there. And then also our next damage control will be promoted soon. And the next damage control, I think, I'm not sure what it is yet. I think we have a couple of ideas. So thank you all for coming. Stay tuned for more information. See you guys at the closing table. Remember, I need 5 more. 5 more, guys. So
take care, guys.
Yeah, I need 5 more too. Forget about Anthony. I need 5 more.
Get Bob chime in.
Anthony doesn't pay. Call Bob. Call Bob.
Yes. All right, guys. Have an
Thanks,
awesome day.
Thank you, guys.
And remember, we're here for you. Let us know. Talk to you soon. Bye.